Monthly Market Report for September 2024. Market movement. In September, the VN Index moved sideways, up just 0.3% month-on-month, with a strong recovery in the last week of the month. Vietnam's equities experienced notable fluctuation due to both external and internal factors. Early in the month, investor sentiment was shaken by the impact of Typhoon Yagi, the strongest storm in the South China Sea in 30 years, which led to severe flooding and raised economic concerns. This triggered panic selling as the market worried about potential negative impacts on the GDP and corporate earnings in the third quarter. Despite the initial decline, the market stabilized by mid-month and began to recover in the later half. The VN Index once again attempted to break the 1,300-point resistance level, supported by improved earnings growth, a reversal in foreign investor flows, and reduced currency risk. Solid macroeconomic indicators further fuel optimism, pointing to a possible breakout in the near future if no unexpected disruption occurs. Sector performance. In September, financials and materials were the stronger performing sectors, while energy and utilities lagged behind. The financial sector rose by 2.8% month-on-month, driven by strong inflows, particularly into banks, as retail investors grew more optimistic about the sector business outlook. Brokers also gained, supported by positive market sentiments and expectations surrounding upcoming non-refunding solution reform. Materials gained 1.8% month-on-month as China's stimulus measures lifted commodity prices, boosting confidence in Vietnam's steel producers due to potential improvements in selling prices and profit margins. Meanwhile, the utilities sector dropped by 2.5% month-on-month, impacted by typhoon-related damage to electricity infrastructure, including transmission lines. Energy saw a 6% month-on-month decline, mainly due to profit-taking, and Vietnam National Petroleum Group's flat profits before tax for the first 8 months of 2024, which fell slightly below investor expectations. Macro review. In the third quarter of 2024, Vietnam's GDP growth surged to 7.4%, bringing the 9-month growth rate to 6.8% year-on-year. This strong performance was mainly driven by key sectors such as manufacturing and processing, which grew 11.4% year-on-year, logistics up 11.1%, finance up 8.4%, and telecommunications up 8%. These figures exceeded market expectations, especially after the second quarter's growth was revised upward to 7.09% from the previous 6.93%. If the fourth quarter follows typical growth patterns and external risks remain minimal, Vietnam is on track to achieve the upper range of the government's optimistic growth target of 6.5 to 7% for the year. The Consumer Price Index, or CPI, increased by 0.28% month-on-month, while for the year-on-year figure, it rose by 2.63%. The year-to-date CPI now stands at 2.18%, with an average monthly rate of 3.88%. In September, despite Typhoon Yagi dropping up food prices by 0.9% and education costs by 2.1%, a drop in international oil prices caused gasoline prices to fall by 3.1%, leading to a 2.8% decline in the transport sector. Regarding the trade balance, in September, exports reached $34.05 billion, an increase of 11% year-on-year, while imports total $31.76 billion, up 11.5% year-on-year. This resulted in a trade surplus of $2.29 billion, marking the fourth consecutive monthly surplus. though lower than the previous month due to the impact of Typhoon Yagi. The cumulative trade surplus for the year now stands at $20.78 billion, reflecting a 4% year-on-year decline. In terms of foreign direct investment, or FDI, total FDI inflows in September reached $4.26 billion, a year-on-year growth of 106.6%. This brought the cumulative FDI for the year to $24.78 billion, up 22.6% year-on-year. Newly registered capital amounted to $1.56 billion, up 14.2%, while existing capital increases surged to $1.93 billion, a 212.3% rise. Disbursed FDI was $3.2 billion, up 13.5%, bringing the cumulative total to $17.34 billion, an increase of 8.9% year-on-year. For the Purchasing Managers Index, or PMI, this figure fell to 47.3 in September, down from 52.4 in August, dipping below the 50-point threshold for the first time in 6 months. This decline was primarily due to temporary disruptions in productions and supply chains caused by Typhoon Yagi. Despite the downturn, business sentiments regarding future prospects remained strong, hitting a 3-month high. Market view. It's becoming clear that the economy is gaining momentum, as shown by strong GDP growth in the third quarter. The International Monetary Fund, or IMF, has adjusted Vietnam's 2024 GDP forecast upward from 5.8% to 6.1%, while S&P Global raised its projection to 6.2%. Both organizations pointed to resilient trade activity and supportive fiscal policies as the main reasons for this positive outlook. Credit growth as of mid-September reached 7.38%, up from 5.73% during the same time last year. Choice stock commercial banks led the way with growth of 8.6%, outpacing state-owned commercial banks. By the end of September, credit growth is expected to reach 8.5%, driven by the rising demand in the manufacturing and mortgage sectors. Looking ahead, the banking sector is set to be a major contributor to market performance, supported by strong earnings growth, recovering foreign investments, lower currency risk, and stable economy fundamentals. If there are no major disruptions, this factor creates a positive outlook for the market, with room for further gains in the coming months. That concluded our September market report. Thank you for watching and stay tuned for more insights from Kim, Vietnam.